Hi, welcome to the channel. I'm Chad Anderson. This guy's Zach Jones. Let's jump right into big, bad, ugly word that can kind of make you cringe a little bit, to be honest. It's one of those trigger terms, Zach. So don't freak out on me because I'm not accusing you. We're just chatting. Okay. So don't freak out on me here. Charge through the camera. We're going to talk fraud today. And there are like almost infinite number of scenarios where you could come up with some fraud situations, okay, where you could do fraud. And that could come from the realtor, it could come from the loan officer, it could literally come from an assistant, it could come from an appraiser, it could come from an inspector, it could come from a title company, from a buyer, from a seller. Mortgage fraud, housing fraud can come from any direction, literally, okay? One of the big ones, and this is the one we're going to talk about today. It's not the only one because there are others, such as employment fraud. That's a big one. Straw buying, misrepresenting to underwriters, faking documents, forging documents, all those kinds of things. But one of the most prevalent pieces of fraud that we run into quite often is occupancy fraud. Yep. And that's a big one. And yeah, I want to tell a quick story and explain something as well as we lead into this. And what this means, what occupancy fraud is that you're getting a mortgage. And when you get the mortgage, your intent is to occupy or not occupy the home based on how you present. So on the application, is it going to be your primary home? Is it a vacation home? Is it an investment property? All those things matter when it comes to underwriting and which program you fit into, et cetera. So you kind of have to take a look at this and figure out, all right, well, am I manipulating? Am I being honest, et cetera? And Zach, the story that I really like here is that Fannie and Freddie kind of caught on to it and they raised interest rates on second homes. So we'll get into that. That's just a little teaser. They did that about 2 years ago, year and a half ago. So 2 years ago. So we'll get into that here shortly. But Zach, you see this. I mean, it's something we fight every single day. 9 times out of 10, the person knows what they're doing. There is that one-off where somebody saw a TikTok and said, "No, this is okay. Everybody's doing it," and they didn't realize what they were doing. But yeah, your thoughts on this just in general?
Yeah, I think it's not as prevalent as, what we used to face when there was such a discrepancy between the more desirable owner-occupied house and the less desirable investment property. And then second homes were in between. Second homes were really almost exactly like primary residences.
Yeah.
So we did see a lot of discrepancy or a lot more inclination toward misrepresenting or misremembering whether or not we were going to live in the house or rent it out. So that's equalized a little bit. But we still do see this. And interestingly, I got wind about, I don't know, sometime in the last month that there's some kind of reverse mortgage fraud going on with some of these specialty investor type loans, which, you get a product and somebody's going to try to take advantage of it one way or another. But I think we ought to kind of spell out those definitions and then also talk about what the penalties are, because the penalties are substantial for mortgage fraud.
Yeah. I mean, it's a felony. You could even, if the wrong person, in your case, the wrong person got a hold of your case, you can go to jail. And
well, let me go ahead and spell this out, because that I don't want to be doing too much teasing in this little short video that we're doing. There is a notice that we are required to put in all mortgage loan packages. Every single mortgage loan package that gets signed in America has an FBI warning. What we have come to know, I don't know if that's even the technical term, but that's what we know it as, is the FBI warning. Has the Great Seal of the Federal Bureau of Investigation on it, and then it has the statute that spells out that someone found guilty of mortgage fraud. Mortgage fraud is investigated by the Federal Bureau of Investigation. So this is not the Bank Compliance Committee or the local sheriff, or Barney's not going to come knocking at your door and start fiddling around for his bullet. The FBI is going to come in on you, and they're the ones who are going to do the investigation. And so I knew you'd like that Barney Fife reference.
Absolutely.
So the penalties are up to $1 million and up to 30 years in federal prison.
Yeah.
It's really pretty serious.
Yeah. Yeah. It's not a jaywalking ticket in Mayberry. Okay.
Right.
It is.
Right.
It's a big deal. It's a
Citizens
real big deal.
Arrayus. Citizens Arrayus.
Yeah. He called me a boob. Yeah. Oh, yeah. All right. All right. Look, Andy Griffith, by the way, the greatest television show in history. I'll fight anyone who disagrees with that.
There you go.
It's unbelievable. All right. So from the occupancy piece, why would somebody do that? Explain that, Zach, and kind of some of the examples you've seen where people have tried to do it, or maybe you've heard the story or through the grapevine, and the reason they're actually trying to make it happen.
Well, the occupancy piece of it is basically loan terms. That's where the primary driver is. Historically and still today, you're going to get better interest rates on a primary residence than you are on an investment property.
Mm-hmm.
You're also going to have smaller down payments. You're going to have more loan programs available to you. You may not have. You're not going to very rarely do you ever see reserve requirements on first primary residences, but you'll see them on investment property. So it's just easier and cheaper to buy a primary residence than it is to buy an investment property. So somebody's trying to kind of build their portfolio and fudge the numbers a little bit. They want to buy it as a primary residence, say they're living in it, get a better loan, and then it's easier to get in, easier and cheaper to get in. I remember there was a house 2 doors down from me in an old neighborhood that I lived in, and it went up for sale. My neighbor was leaving the neighborhood. We'd all been in there for a long time. Guy moves in, and literally they close, and I see the door open, and the only thing I see this guy move into the house, there's a bicycle in the garage. There's a 10-speed bike. And my other neighbor up the street, who's a real estate agent, calls me up and says, "Hey, did you see so-and-so's house is on the market as a rental?" And I said, "No, I didn't see that." And she said, "Just popped up. Has he moved in?" And I said, "Well, I saw a bicycle in the garage." So this guy had literally bought the house, moved into the house, barely, maybe brought a bag of laundry in,
Right,
and had already advertised it for rent. And we were a small neighborhood, and there weren't any rentals in the neighborhood at the time. And so everybody's like, "What's going on?" And I was like, "I bet that guy's committed mortgage fraud. I bet he's committed occupancy fraud. Otherwise, he wouldn't have moved in. If he bought it as an investment, he never would have moved in to live in it."
Right. Yeah. What people, don't realize as well is that there is another document in the closing package, and it says that you're going to occupy the home for a year, basically. And it says that you're also supposed to occupy the home within 60 days of the closing. Now there are people who though say, "Well, what happens if I move in and 6 months later I hate the house, or I hate the neighborhood, or I want to move again, or a better deal comes on the market?" Yeah. Well, so if you get a job transfer, it's legit. It's easily documented, right? The gray areas turn into your opinion, your subjective opinion.
Change my mind.
I don't like it anymore.
Right.
I don't want to be here anymore. I hate my neighbor. I didn't meet Karen before closing.
Right.
Now I hate her. And I've always hated her. I want out of here. Those kinds of things, like, you basically have to have a legitimate reason that you can back up and that you can document and that you can talk your way through. That is legit. And let's go into the Fannie Mae thing now. So this is a big one. For years, Fannie Mae, if you wanted to buy a vacation home, you could buy a vacation home, and the interest rate was the exact same as a primary residence.
Yep.
Think about that. And here's how it would qualify as a vacation home, okay? It would mean that, okay, if you live in Nashville, you buy a beach house. You live in Nashville, you buy a home in Gatlinburg in the mountains. You live in Nashville, well, you buy a lake house that's only 45 minutes from your house in Nashville, but it's actually on the lake.
Right.
Something like that. Or a resort style community. those are vacation homes. And somebody said, well, it's not a vacation. I buy in another city because my kids live there. No problem. You can do that too. The rule was
Second
100
home.
miles. Like you want to
Right.
be 100 miles from where you live currently, and a good explanation as to why you're doing it.
Or a
And
resort that would make sense, like your 45
right.
minutes to the lake on the weekend deal.
Yeah, correct. So that's like a big deal right there. And you just run into that situation where people were taking advantage because all of a sudden the Airbnb bubble started coming up, right? So it was, okay, let's go buy a second home. We will spend time there. We will vacation there. We legitimately will go there and stay. However, when we're not there, I don't want a house just sitting empty on the beach.
No.
Put that baby on Airbnb. And underwriters knew this was happening. So they would just simply qualify you off of the second home. And if you qualified, you can say, yeah, it's a second home. I rent it some in the summer. I go in the summer. I go in the fall. I rent it in the fall. I'm a snowbird. I go down in the winter. All those things, right? But Fannie Mae and Freddie Mac got tired of it. And in January of 2022, they came out and said, party's over. And they changed second home property interest rates to match investment property rates. So now you're stuck and you can't even buy vacation homes anymore because you end up with higher interest rate.
Right.
Same as investment property. Now, investment property are actually better rates a lot of times than second homes, or easier to qualify for because you can use projected rent to qualify in those cases. So they kind of shut all that down to where you couldn't do it. And that's the crazy part, right? It's like we all knew what everyone was doing, but there was nothing against it. Like you could do it as long as you qualified for it. But that rate hike just threw everything off on that.
It did, because it burned up the positive cash flow, and it just made it difficult to make that work.
Yeah, it was tough, like, because second homes also you do 10% down, you still can, but the number of discount points and costs and the high interest rates you have to pay, it just doesn't work out too well. Because think about it, if you're an investment property owner, but you get a second home mortgage and get a lower interest rate, don't you cash flow more? I mean, common sense, right? Like just
right.
easy peasy. So then it's, well, why are investment rates and second home rates so much higher right now? And why have investment rates always been higher? Simple answer, and then you can jump onto the back of this, is if things hit the fan, which house are you abandoning first? If you can't make a payment, which one are you losing first? You're losing the investment property. You're giving up the vacation home, not your primary home, right? I mean, pretty simple.
It's all comes down to risk in the mortgage world.
Yeah, credit, income, occupancy, down payment, number of reserves, assets, etc. All right, so primary home, kind of wrapping up on the topic here with the show, but where do you see a lot of times, when people are trying to jump, or I don't know, like you get people who say 1 year in, 2 years in, 3 years in, like what do you run into, or have you ran into different experiences where people are pushing that fine line of, okay, I just moved here a year ago, and then, I want to add to my portfolio, because it's always kind of gray, right? So how do you judge people when they're going over the application with you? Because a lot of times people will say, I can't completely decide. Should I just move and then keep my home and rent it out? Or should I buy it as an investment? And they're almost asking you for advice, right? Like it puts you in a little bit of a trap.
Right. Well, and just to be clear, once you've met that minimum occupancy requirement, there are no official prohibitions in the mortgage rules and guidelines for conversion of a current primary to an investment property. All of that idea of house hacking is still completely legitimate. You want to buy a house, live in it for a couple of years, convert it to an investment property, buy a new primary residence, and move on. You're completely okay to do that. It's just when you start trying to churn that and do that in a short period of time, that it becomes suspicious. And then once the flags go up, um, everybody involved is involved. That's the best way to say it. So you've got as a mortgage guy, I'm always going to assume, my default, Chad, is to assume innocence and naivete. So it's an issue of ignorance. And if I approach things like that, then it also, because I'm bringing an education and an awareness to my borrower, if they're trying to intentionally be fraudulent, then I'm going to scare them off, which is what I want to do, because I don't want to be involved in that.
Right.
Maybe we can kind of wind up, just as a reminder, how do people get caught with this? Because there's a lot of different ways to get caught with occupancy fraud. But that's kind of typically my default. And what I'll see is people coming in, occasionally, and I've seen some that were, they were trying to pull a fast one, and then, we start kind of poking around at it, and then they dissolve and disappear, vaporize on me. I know, they were trying to pull a fast one, and I'm just not the right guy today. But most folks, when they come in and they're doing something like this, then, you dig in a little bit and you find out that there's, maybe they're expecting another child, and suddenly their 3-bedroom needs to be a 4-bedroom. There is a neighbor issue or something like that. And I think that there was a situation, we were talking about neighbors, and there was on that particular one, they had such a conflict with the neighbor, and it was about a fence between the two driveways, and they were just going after it. My client had video, and I think it actually posted on social media. They were setting up a war. I was like, that's good evidence. That's good evidence. Let's convert that to a rental and get yourself a new house, because you got a legitimate complaint. So there's lots of ways that we can prove that in a way that's substantive. But the short term, I had one guy I remember was moving in from North Carolina or something, trying to use an FHA, and he was shady McGrady, and he was trying to do this every 6 months, go to a new city and buy a new FHA house. He worked remotely, and I was like, dude, that's not going to work for us.
Yeah. We can wrap up with, like you said, how do people get caught? It's really not that hard. And there will be companies that legitimately will go to the extent of door knocking.
Yeah.
They actually will door knock and verify that you are doing what you said on the mortgage application. And then they'll question you about it if anything seems to be off. And for those of you maybe wondering, there is such a thing as investor occupancy fraud. You may say, well, why would somebody lie about occupying as an investment property when it has the worst deal? The short answer is there are investment property loans out there that have minimal documentation. So if you don't qualify the traditional way, then maybe you go an investor path and treat it as such that has minimal documentation, but it allows you to get into the home, even if the terms are worse, just because you simply want the home. And then you figure out how to refinance it later into a primary residence and so forth. But you brought that up earlier before we started. And yeah, there's actual door knocking that takes place.
Yeah, it's kind of crazy. And I think that's the slow and hard way to do, verification of occupancy. But, I was aware of a certain down payment assistance program that they were extraordinarily good at understanding who was living in the house and whether or not somebody had moved out and turned a property into an investment property, because they were owner occupied only. And they were doing that through the IRS with Social Security numbers, because they're an IRS bond-backed agency. You've got, the ability to track people recording utilities in their name under their Social Security number. Maybe somebody, buys an investment property in Nashville, and then they've secured a job in Atlanta. with the social security number and a background check. I'm not sure how people get access to all that information from a, mortgage investigation venue, or avenue. But we certainly see people being very surprised at how in the world did they find out I'm not living in my house? Are they sitting out on my curb? No, probably not. It's too soon to even know that. But something happened in your record somewhere that triggered and activated something else. And I guess there's fraud checks and all of that stuff that we do in the mortgage business. You bought another house in Tecumseh, Virginia, and so where are you living? What's going on?
Right. Yeah. It's, there are ways to figure it out. And I think what Zach said too, if you look at it and go, man, that is slow and labor intensive to make all that happen. Well, I think the argument to that, or the thing that people should wake up and realize with that, is that's how serious they take it.
Right.
To the sense that they're putting people on these sidewalks, knocking on doors, and that's how serious they are with it. So
crazy.
Yeah, you gotta, like, just put your head down and sleep easy at nights. How about that? And quit trying to save a couple of bucks here or there. That'd be the better idea.
Right.
All right, guys. Just that's it. Occupancy fraud, the big deal. I hope you learned something, caught something with all that. But again, if you got questions, reach out to us. You got Zach over there, my stuff down here, over there. And then up there on the channels, that was horrible. Up there on the channels, you got YouTube, Instagram, and Facebook, all of those as well that you can catch us on. So thanks for hanging out, and we'll catch you next week. Take care.
See ya.